What's up, y'all boys? Today is Friday, September 26th. It's currently 10:05. There was news at 8:30. Core PCE price index, U.S. personal income and outlays, August 2025. And then 10 a.m. revised University of Michigan consumer sentiment. That's medium impact, not really too important. So 8:30 was one of the more important news just overall for today. And there was a bullish reaction. Price broke structure to the upside out of this downtrend that it's been in for the last couple of days. So as you can see here from yesterday, this being yesterday, price had been on this downtrend, making lower lows, lower highs, lower lows, lower highs into yesterday. Price made a lower high after making a lower low and then takes out that recent low, but doesn't continue further down, just moves sideways. It's liquidity sweep, relatively equal low candle closure, liquidity sweep, break of structure, because, well, I guess not necessarily yet, but on the lower time frame, yes, break of structure to the upside, especially now. But price broke structure to the upside during pre-market, right? PM session yesterday into pre-market today, sideways, broke structure to the upside instead of pushing further down, moving higher. But this was that 8:30 news that we had spoken about. Price broke structure off of that. Now, with it being a news break of structure during this current trend, not really too sure what's going to happen, because typically during a downtrend, bullish news may make a reaction and then continue the overall higher time frame trend. So the idea that price will continue higher, I'm not too sure about, since the narrative that price will push higher, I'm not too sure about, since we've had this higher time frame downtrend. That being said, anything can really happen. I've been on the market since about 9:30, 9:35. So I'm on it. I'm watching, and even on NASDAQ, a higher high was made than ES during that 8:30 news. So price could also just continue to bounce within this opening range, being that the 8:30 news was within this point, you could say, of support, resistance. But what am I looking for outside of this? So for the strategy that I currently use, and the reason why I use this strategy, just as anyone else, is so you can have a repeated inputs to have your desirable output, or an output that is just based on the current circumstances, but the output is in correlation. Not necessarily the output isn't really in correlation, but what I'm saying here is that I want consecutive, repeatable inputs driving a desirable output, but regardless of the outcome, I continue this strategy. That's the goal within trading, within having repeatable results and measurable results, is all about having the most accurate inputs, the most consecutive inputs, relative to the overall strategy that you've been using for however long you've been trading for. What I mean here is basically like, you want to keep on the same strategy so then you can have measurable results, because if you're using different strategies, it pollutes the study. you're adding uncontrollable variables on top of the fact that trading is an uncontrolled, or the market is an uncontrollable variable. It can be controlled, but to understand that you're going to know what happens next is to understand that you're not going to know what happens next is imperative. You must understand that, but still repeat your strategy. So that's my mindset going into this with overall strategy. But with my current strategy that I use, I mark out the 15-minute opening range. So the 15-minute candle, 15-minute 9:30 candle, I mark out the high and the low of that candle, move down to the 5-minute time frame, and I do the same on NASDAQ. And then you wait for an exit out of this opening range, wait for a candle closure out of the opening range, along with an increase in volume towards that trend. And then you wait for price to come back in to this opening range. And then wait for price to exit. Wait for a candle closure again in that same direction, confirming that price will continue on this trend. Now in this case, had that 8:30 news, price continue to rally, taking out these recent draws, and then just falling down. And this, if price were to follow falling down, retrace back in, and then fall down again, that would be high confluence for the or that would be a high confidence setup for the overall trend to continue this overall trend to the downside. NQ bearish on the daily, ES bullish on the daily, giving us further conviction that price may continue to the downside. As on NQ, price is breaking or doing what we talked about, closing below that opening range, hopefully closing below that opening range. But you're starting to see that there's an increase in volume to the downside versus volume to the upside. Volume to the upside, volume to the downside. There's more volume to the downside, obviously, since bearish on the daily. But just wait. I'm going on Tradeovate so then I can, or right now I'm going on TradingView so I can map out what will the size of this position look like. Because on Tradeovate, you're not able to understand and scale the size of the position within the software. You're only you really just place your however many ticks you would like to place within your range of stop loss and take profit. But within TradingView, you have the flexibility to understand and measure out the price range, which is super helpful. Going into the idea that you want those repeated results, to have repeated results, repeated execution is important too. So what I'm looking for is targeting first a 1 risk to reward ratio, and then my second take profit would be further down. But price didn't close outside of orb, neither on NQ, indicating sideways movement. So another thing about this strategy is when you see consecutive candle closure within this opening range, which price did break orb. But with this current setup, I'm more skeptical. I'm skeptical on this current setup because you had that break of structure to the upside off of news. You've had this overall trend after Monday making all-time highs. This could just be that relief, or it could be a continuation of the downside. You got a minute and a half on this candle. Along with the fact that ES is bullish and Q is bearish. SMT, ES made a higher high, NQ made a lower high. Give it about until 10:30 and then I'm getting off. Show you guys the charts. blow my nose quick, but NQ is breaking structure or breaking orb. ES as well. Let's see. Candle closes in less than a minute and a half. There we go. Looking for some sort of retracement back into orb. This computer's getting hot, dude. Y'all see I'm on that T wave, huh? Should go for your gut health and shit. Come on now. Shit like that. Could just get a slide to the downside. No sort of retracement. There we go. Just a little bit of shade. Come on now. When I get home, I want you. When I get home, I want you. And no retracement. The sledgehammer of a candle. Not great confirmation for me to continue further down. I think that is where I call it, y'all boys. That is where I call it, y'all boys. I'm gonna write on Google Sheets. That is that. Continuing further down. Personal income increased 95.7 billion, 0.4% at a monthly rate in August, according to estimates released today by U.S. Bureau of Economic Analysis. Disposable income, personal income, less personal. All right, that is just yap shit, bro. Yeah. don't even know what to call today. What is it? Sliding downtrend? I just want to account for this 830 break of structure to the upside because that in itself threw me off a little bit. I mean, just hasn't been a retracement though. No true retracement. So what about this candle throws me off? I'll blow my nose again. Fuck that. All right. So what throws me off about this candle is the fact that it's a sledgehammer. Call it what you want, upside, doji, whatever the hell. But what had happened was price had fallen, continuing this trend. And then you had a sudden surge in buy orders, which increased volume, pushing price higher up here. It did not retrace. If we go on, get real technical here, it was about a tick away from retracing into back into opening range. And with this surge of orders to the upside right here, and this candle closing like this does not give me great confirmation to say that this overall trend will continue. And it may, and I may just be wrong. But to enter on a candle like that would be a variable to include that trashes today, because it's not something that I can specifically look at and say we retrace back into orb, because we didn't retrace. We're about a tick away. And even a tick away can be something substantial. Now, would I enter if it did? I don't know. Then you get into the conversation where you have this fair value gap up here that would likely eventually be filled. It could just be a situation similar to yesterday where now every day is different. Today could be completely different, but could just see an exit, close retracement, not no retracement at all, but instead of entering long because you have this gap, this fair value gap here, that would likely eventually get filled. So if you do go long here, you have the risk of price coming back and filling this gap, which is not something that if you're gonna gamble whether it fills that gap or not, I guess you'll find out, whether it be a tuition fee or a win that can't really be measurable in the long term. Because in situations like this, in my experience, when I hop in just because I'm compromising the entry point, I end up suffering a loss for it, especially since it doesn't follow the strategy. And you do not want to take the first move out, because the first move could be typically manipulation. So you would wait for retracement back up. But in this current circumstance, with my judgment, I'm better off just getting out. Sliding down trend. No trades. With the current circumstance, you are better sitting on your hands and walking away rather than compromising your execution point for a, I mean, what do you want to call this? Like a B- setup? There you go. Price is retracing back in. But could just start bouncing within orb. Therefore, I'm better off getting out. So, gonna put that shit on the Perfect Trader. And then computer better not turn off though. Candle closes in 9 seconds, less than 9 seconds. Let's see what happens. Yeah, nah, I'm good. All right. I think that basically tells y'all boys where my head's at. Now, if price were to immediately